Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on today in the markets? This is the last trading day of August. I can't believe we're already entering into September. Well, the Dow is down about 30 points. Nasdaq's up about 20 points. So basically a flat line. Now, we did try to bounce earlier today, and we come right back to the flat line. We're having trouble bouncing. The SPY, it's sitting right on the 50-day moving average, right at 398, and that's the 50-day moving average. Now, normally that holds. So far, that support's holding pretty good, but I expect a bounce off of here. Now, let's explain why. All right, now, the VIX has what's called a death cross, meaning the 50-day is crossing below the 200-day. Now, the VIX has shot up. It spiked up from 19 up to 26. That's a big jump. That's 30%. But we got that death cross now, and I think that's going to pull the VIX back down, which is the volatility index, the VIX, and I think that's going to get the bounce in the market. Now, here's the reason why I am a little bit worried about that. I look at the HYG. The HYG is the junk bonds. The junk bonds, they cut right through their 50-day moving average. So on the SPY, we may cut below the 50-day moving average, overshoot it a little bit before we get the bounce. I think we're going to get a bounce in the next couple days. We're going into Labor Day weekend. Usually Friday is an up day before the Labor Day weekend. Now, after the Labor Day weekend, we usually start off with a down day. Okay, so anyways, that's just my take on the market. I am thinking we're going to get a bounce. We could come down a little bit lower. We're not oversold by any means of the word. We had that big run up and we've retraced 50%. We could come back down and retest the lows back in June. Those lows need to be retested. Now, will we make a higher low or will we bust through those lows and keep going? I think we'll make a higher low and then we'll take off higher. They'll push it up into the coming election, the November election. I think that's how it's going to play out. But I am looking for a bounce. It hasn't happened yet, but I'm looking for it. All right, let's move over to the real estate market. Now, what do we got going on in the real estate market? Well, we got home builders are kind of they're not in a recession. They're actually in a depression, and it could become the Great Depression for them. Do you know several home builders, they've already stopped building? You see, new home construction is built in phases. You get a big company like Toll Brothers or Lennar, they buy the big plot of land. They don't build them all right up. They have to start somewhere. So they build phase 1 and they sell those, build phase 2, then sell those off, phase 3, sell those off. And, in the past 12 years, they've always had them pre-sold. Well, they're having a problem right now. They're not getting them sold. They're not getting them pre-sold, and people are backing out of the contracts they're already in. New home sales are down 30% year over year based on volume. 30% down year over year based on volume. Now, prices have started to come down. They peaked in April and they're starting to come down. They're already dropping over 10% on new home sales. Okay, but the home builders, they've stopped building. Why they stopped building? Well, they can't get phase 1 sold, right? Phase 1 is sitting there. They're all done. They're ready to be moved in, but they can't get anybody to move in because no one will pay these outrageous prices. Now, the problem is they would drop the price, but then they don't make any money. They lose money. And how many homes do you want to build? If you lose money on each home you build, do you want to build a lot of homes or little homes? You want to build very few homes if you're losing money. Look at the cost of home building has gone up. We got the supply chain issue, which is keeping supply chain constraint, and they're not finishing the homes on time. But now they're finishing the homes and they can't get them sold. You see, interest rates spiked up. They were at 3% when they started to buy all these homes. They penciled it out, and at 3% it all made sense. But at 6% they're going, we're having a little problem getting it sold. Who are we going to sell it to? And that's the thing. So they stop building, right? They stop building. They go, look, don't build phase 2 until we unload these phase phase one houses. And they're giving away a lot of incentives. I mean, you can ask for anything. You can ask for, I'll add air conditioning to the home. I'll buy it. Oh, put a swimming pool in the backyard. Then I'll buy it. You can ask for these incentives because they don't really want to lower that price. Because some people, they've already bought their house, and you don't want to be right next door where your house just is $100,000 lower. When the house next door, they paid $100,000 more. They're going to have buyer's remorse, and they're not going to like the home builder. So they try to keep the price up, but they give you amenities, give you new appliances, give you that marble countertop, give you that swimming pool, give you that air conditioning. They throw it all in, but okay, but they got problems. They still cannot get them sold, even with the incentives. What are they going to do? Well, they're going to stop building. Now, you see, this started back in with the Evergrande problem. China was really the first one where the builders had problems, the developers had problems. They took deposits from people and they couldn't finish the project. They couldn't deliver the homes because they didn't have the money to build the homes. Yeah, they took the deposit, but that wasn't enough money to get the home built. So they have problems. They're folding over there. They're folding. They're going out of business. Now, if you go to Australia, Australia's got the same problem. Their builders, their contractors, they're going out of business. They're not finishing projects. They just are going out of business. You see, it's not profitable to build homes if you can't sell them for a profit because there's no buyers, right? The buyers went away when it went from 3% to 6%. The buyers go, we can't afford these homes. And the home builders, they don't want to build homes at a loss. They can only do that for so long before they have to go out of business. Now, how low can home prices go? Well, that's a really good question. How low can they go? Well, right now, let's just call the cost to build a home. I mean, it varies. I mean, the actual cost is probably around $100 a square foot if they want to make profits, about $150 a square foot. And if they want luxury, it's probably about $200 a square foot. Those are rough numbers, right? But the builders, they can't build for less than that. So they have to sell at a certain price. And the land value costs a certain price. And when you put it all together, the price is too high. People can't afford it. Now, when I was a young whippersnapper back in the 1980s, anyways, I was taking these appraisal classes, right? And I was doing an appraisal on a property, and it was up there in Washington, Federal Way, Washington, to be exact. And the professor wanted us to do replacement cost. And I said, okay, well, that's easy. Replacement cost, the building cost back then was about $40 a square foot. I'm just going to use rough numbers, but $40 a square foot, right? And so the home was 3,000 square feet. That made sense. Okay, so the replacement cost just for the building of the home would have been about $120,000. $120,000. Well, that was interesting. Okay, so $120,000, but the home just sold for $98,000. So I asked my professor, I go, well, how do you do this appraisal? And the professor told me, he goes, well, you got to place a negative value on the land. Now, I never heard about this. I'm just a young kid. Negative value on the land? How does that work? Well, your replacement cost, which you're doing, right? A replacement cost costs you $120,000 to replace it. Now, it just sold for $98,000. So you got to do a negative $22,000 on the land. The land's worth a negative $22,000. Now, none of this made sense to me. It still doesn't make sense to me. But my point is, homes can go so low below the cost to build. Let's say the cost to build a new home. All right, let's say it's $150 a square foot. All right, so $450,000 for a 3,000 square foot home. Well, what if you can only get sold for $350,000? Well, once again, do you put a negative $100,000 on the land? It could happen. I'm just saying homes can go a lot lower than you think they can go. Now, that was back in the mid 80s. I mean, that's way back. Most of you weren't even born yet, but let's go let's just go back to the great financial crisis. What was that? I sold this home in roughly, let's call it 2009. So about 13 years ago. Okay, 2009, I sold this home. It was bank owned. You see, the banks, they took back the homes back then. They took back the homes. That's how they got rid, people, they overpaid for the homes. The homes came down and they couldn't make their payment and the home was worth less than the actual loan. So the bank takes back the property. So this was a bank-owned home. Okay. Now this was in Los Gatos, California. Very rich area, very nice area. Okay. So the people before that they bought from the bank, they had a $2 million loan. $2 million, right? So that means they probably paid above that. Let's say they paid $2.4 million for this house. Okay, so they paid $2.4 million for the house. Anyways, the house dropped in value. And the bank, well, they just gave it back to the bank. They said, here's the keys. We no longer owe you $2 million because it was a purchase money loan, and that's sufficient to pay. You can't go sue the person if it's their principal resident on a purchase money loan. So they hand the keys back to the bank, and the bank now owns it. All right, the bank has it. Take it back for $2 million loan, but it's not worth $2 million, right? Anyways, the bank put this for sale for $1 million. $1 million, right? They were going to take a $1 million haircut. Now, I had my client. They were just came down from Canada, and they wanted to buy this home. Now, I started talking with the person at the bank that was in charge of this, and the bank was saying, look, we want this gone. We want this off our books. We do not want this house. Anyway, so they wanted an all-cash offer, and they had other offers, but they weren't all cash. My client, they were very wealthy, and they could write a check for $1 million. I said, we'll write you a check for $1 million. The offer was accepted. My client writes a check for $1 million. Now, first, a little part to the story, when I showed the client the property, they didn't believe it was worth $1 million. I go, not worth $1 million. Had 3,500 square foot house, luxury house. I mean, top of the line. Anyway, so we're looking at it, and I asked him, I go, what do you think the lot's worth? And the guy goes, well, I don't know. It's selling for $1 million. Maybe it's worth $500,000. I go, the lot is worth over $1 million. Over $1 million. And I took him around the area, and I showed him lots that were selling for over $1 million, and that actually had just sold. And these lots, I mean, it's a big lot. It's like 12,000 square foot lot. That's big for Los Gatos. Los Gatos, that's like a double lot. But anyways, 12,000 square foot lot, they sell for over $1 million. So they were giving the house away. If you buy this lot, you get this beautiful home. It was nice luxury home. Right now it sells for, I'd put it around $3.6 to $4 million range right now. And that's just 13 years later. They bought it for $1 million because they had the ability to write a check for cash. I'm telling you, now a lot of properties are going to go down. They're going to go down a lot farther than you think they can go down. You might get the house for free. You might get the land for negative value. You might get the land for a negative $100,000. The houses, I mean, people think I'm crazy when I'm talking about this, but I'm an old guy. I've seen this. I've lived this. I've seen it in the mid-'80s, and I've seen it in 2009. I was involved in these properties. These are real stories. Place a negative $22,000 on a lot so the house sells at $98,000 and gets appraised at $98,000. I mean, a lot of times today, the appraisers, they're trying to figure out how to make these houses appraised because they're not worth it. Back then, we were trying to figure out how to make the appraisal low because you can't replace the house for what they're buying it. So we just place that negative value on the land. Crazy times, right? We're in crazy times now to the upside, but it's changing. It's changing really fast. Property's coming down. Prices are coming down. It can go a lot lower than you think. A lot lower. Just be patient. Takes time to play out. Might take a year to play out. Might take 18 months. But the bargains, they're coming. They're on the way. I'm telling you, the new home builders, they're going to have a fire sale. They're going to just be giving this stuff away. They can't get rid of it. They stop building. They're going to go out of business unless they get rid of this inventory and figure out how to build at a cheaper price that people can afford. It's changing times. Hang in there. Wait for the bargains. Be patient. Sit back. Watch the show. If you like this stuff, I'm Tall Mike. Give me that thumbs up so we can talk more. Punch that subscribe button. I want to talk to you. I want you to be in the tribe. Get out there, everybody. Have a great Wednesday. Bye-bye now.